Welcome back to the Long Acres Finance channel. Today I'd like to summarize the final results of my quality dividend stock portfolio in M1 Finance for 2021. I started this portfolio in September of 2020 with just $100. The goal for this portfolio is to achieve a long-term annual rate of return of 12%, all the while building a growing passive dividend income stream. And thus far the portfolio is exceeding this goal, with an annualized rate of return of 27.03% through year-end 2021, and a small but quickly growing passive income stream. This is more of a hobby portfolio where I can deploy my dividend investing strategies. I leverage my monthly watchlist to select the dividend stocks I invest in. The portfolio finished 2021 with a market value of just shy of $5,500 and a total return for the year of 30.15%. That's a wonderful return that slightly outpaced the S&P, which finished last year with a return of 29.58%. December was a very strong month, with the portfolio adding 5.99% to its annual return. This was 0.8% better than the S&P, helping nudge me ahead of the popular index. The year did start out a little rough. The portfolio trailed the S&P by 1.39% after quarter one. This was due to a loss of 5.37% for the strategy in January of 2021, whereas the S&P only shed 1.01% during that month. So right off the bat, I had quite a large hill to climb to bridge this gap to the S&P. But I stayed patient and stuck with my long-term strategy, and it paid off. The portfolio bounced back and had a few very good months, gently outpacing the S&P. Each subsequent quarter, after quarter one, the portfolio beat the S&P. The final result was 0.57% of alpha over the index in 2021. However, the portfolio still trails the S&P since its inception. The 4 months of trading in 2020 were a little rough as well, and even after a solid 2021, I still have about 2% to go to catch the S&P. But in all honesty, beating the S&P is not really a big deal for me. My main objective, as I stated earlier, is to hit a 12% annual rate of return in the long term. After 16 months, the trailing annual rate of return sits at 27.03%, which is a very comfortable level, well above my target return. My second objective is to build a growing passive income stream that can one day supplement a portion of my retirement. This isn't my primary retirement account, so I'm not looking to replace my income entirely with this portfolio. In 2021, the portfolio produced $36.35 in dividend income. All of these dividends were reinvested right back into the portfolio, so they can earn me more dividends in the future. This is how you feed the compounding machine. I know this amount is rather small, but the importance is that the level of dividends coming in from the portfolio is growing each month. And at one point, the dividend income will exceed my contributions and become the primary driver of growth for the portfolio. December was the best month in terms of dividend income that finally crossed into double digits. I received a total of $10.43 in dividends for December. That's nearly 29% of the total dividend income I received last year in this portfolio. December also beat the prior highest dividend month by 67%. The prior best month was September, where I received $6.22. The reason why quarter-ending months are the best for dividend income is simply due to the fact that the majority of the positions in the portfolio pay their dividends during quarter-ending months. Actually, comparing dividends on a quarterly basis is much more efficient in terms of seeing the consistency in dividend growth. In quarter one of 2021, I received $1.98 in dividends. The dividend amount more than doubled in quarter two, with a total of $5.61 received. The dividend amount doubled again from quarter two to quarter three, as the portfolio produced $11.29 in dividends. The growth between quarter three and quarter four was about 55%, as I received a total of $17.47 in quarter four. My forward-looking projection for the quarterly dividend amount is about $35 right now. So quarter one of 2022 should easily beat quarter four of 2021, and maybe it can even double the prior quarter. My annual forward dividend income is expected to be about $143. Although, seeing how I continue to add capital to this portfolio, I am actually expecting to receive much more dividend income in 2022 than the current projection. Midway through January, the portfolio value is already about $1,200 higher than where it was at year-end. I've come into some spare cash recently and decided to invest that cash into this portfolio. I have already received $4.99 in dividend income for January thus far. This is 64% better than the prior corresponding month, which was October, and 18 times higher than January of last year, and we are merely halfway through the month. Granted, the portfolio was significantly smaller around this time 1 year ago, but you can get a sense of how quickly the dividend income is growing. Last year, I received $36 in dividends, and in 2022, I should come close to about $200, which will be about 5 times more. Of course, that depends on how attractive dividend increases are and how much I can contribute. There are currently 90 unique dividend stocks in this portfolio. I know that sounds like a lot of unique positions for a portfolio with a market value of about $6,700. But there is a science to the madness of my stock selection process. I use my 2 monthly dividend stock watchlist, the high yield and the high growth watchlist that I run and share every month. I take the best ideas each month and invest new contributions into those ideas. And I have not sold any positions in this portfolio yet. I am practicing a buy and hold strategy. And since this is a taxable account, if I sell any position that has an unrealized gain, I will be subject to capital gains tax. I'd rather not have to pay any taxes if I can help it. That said, I think I will try to cap the number of holdings in this portfolio at 100. So once the number of new ideas from my watchlist leads to the number of positions in this portfolio to exceed 100, I will have to figure out which position or positions to liquidate. I've been tracking how much time has passed since the last time I have added capital to every position, and I will likely look to liquidate positions that have not had capital added to them for the longest period of time. For tax purposes, if I hold a position for at least a full year, the capital gains tax rate is reduced from 35 to 15%, which is a very large difference. Warren Buffett is often quoted for saying the first rule of investing is don't lose money, and the second rule is not to forget the first rule. Taxes are a huge reason why many investors lose money. Anytime you can eliminate or limit tax obligations, you stand to benefit in the long run. Keeping Uncle Sam out of your investment portfolio for as long as you can is the best way to invest. Now, I don't want to just go ahead and sell a position with the lowest tax liability. That's not the optimal method of choosing which stock to sell. I'll have to review all the holdings in the portfolio and determine which stocks I see the least value in and get rid of them. The smart way to go about this process is to start looking at stocks with the smallest tax burdens. Right now there are 6 positions that I have not added capital to in the last 11 months. They are ADP, Bank of New York Mellon, Comcast, Costco, Graco, and US Bank. All 6 of these stocks also happen to be very small positions in the portfolio. Selling any of them would not have a meaningful impact on the portfolio. But for example, I am a huge fan of Costco, and I'll likely retain my current shares regardless of its more favorable tax status. The portfolio has a dividend yield of 2.13% right now. I use my numbers spreadsheet to compute this figure. The spreadsheet has a built-in function to show me the stock price from the prior day as well as the most recent annual dividend. Using these 2 pieces of information, I can compute the dividend yield for each stock, and by multiplying all of the individual dividend yields by the allocation of each position in the portfolio, I can come up with the portfolio dividend yield. The target dividend yield of 2.38% is computed in a similar way, except here I am using the target allocation of the current stocks I am adding capital to instead of the actual portfolio allocation. These are the stocks from my latest watchlist, so since the target dividend yield is higher than the portfolio yield, I can see that my future contributions are likely to increase the portfolio yield. The portfolio has a yield on cost of 2.33%. This is simply the projected annual dividend income divided by the sum of the contributions to the portfolio. This number generally grows over time, but can shrink as well if I add a sizable chunk of money to a lower yielding position. Another thing I track in my spreadsheet are dividend increases. I have reset this tracker at the end of the year, so I can capture only dividend increases in 2022. Thus far, there are only 2 increases in the portfolio. The first is from Stag Industrial, which has a tiny increase of 0.69%. This increase generated 4 cents of additional annual income for the portfolio. The other increase is from Toronto Dominion. My spreadsheet is showing the increase at 1.04%, but in reality, the bank raised its dividend by 12.7%. The issue here lies in the fact that Toronto Dominion pays its dividend in Canadian dollars, and they raised that dividend from 79 Canadian cents to 89 Canadian cents. My tracker shows the amount in US dollars, and the currency fluctuations are the culprit of the difference. It is a little annoying, but this spreadsheet is just an estimate of the portfolio, and I'm okay with these minor hiccups. This is the first year that I will actually be tracking the dividend increases this way, and the resulting impact on my dividend income. I'm curious to see what the average increase for the portfolio will be at the end of the year, and what total impact these increases will have on my dividend income. My annual projected dividend income of about $143 is already up by $27.52 since the year has started. This is mainly due to the large contribution I made to the portfolio last week. I think it'll be useful to track how my dividend income grows, and the factors that generate that growth, be it contributions, dividend increases, or reinvestment. I'm not one to make short-term market assumptions, but I would like for the annualized rate of return at the end of this year to remain above 12%. Seeing how I am starting the year with a rate of return of about 27%, unless we have an utterly terrible year, this should be a reasonable goal to hit. I'd also like the portfolio to generate about $200 of dividend income this year. I'd like to see consistent quarterly dividend growth, and I would like to have an average dividend increase of 10% across all of the positions in the portfolio. If you enjoyed the video, please give it a like, and subscribe to my channel to be part of my dividend journey. See you next time.